Hey guys, and welcome to another week ahead video. Now, in this trading week that's coming up, we're going to be focusing on the Canadian dollar. We have seen the short-term bias for the Canadian dollar tilt more to the bearish side during these last 2 weeks following the previous BOC's monetary policy meeting. Now, they did come out slightly more dovish than the markets were expecting. We also had a miss on the previous employment jobs report. Now, what's coming up this week, we have a Canadian CPI coming up on Wednesday, as well as retail sales coming up on Friday. Now, we think these two things, combined with the recent developments with regards to the US-China trade war, can provide us with an opportunity to trade the Canadian dollar in this week. So let's jump to the video now to see exactly how we can prepare and possibly trade these two data points. Okay, then looking at our three-step analysis process. The first one, we'll look at the baseline for the Canadian dollar. Then we'll look at the baseline for the upcoming risk events, and then look at some possible sentiment shifts that we can trade in the CAD. Starting with the baseline for the Canadian dollar, it has been more bearish in the last 2 weeks or so following that previous BOC's monetary policy statement. Now, even though we did have some positive and negative effects from the ongoing changes in the risk tone from the US-China trade dispute as well as oil prices, the main focus has been on that recent BOC's monetary policy statement, where the BOC basically took a more dovish than expected turn, saying that they have become increasingly open to the idea of interest rate cuts, mentioning an example of the Fed's insurance rate cuts that they've done in 2019. Now, they did say that something like fiscal stimulus would be far more effective to tackle their concerns regarding growth, but they did say that they are prepared to act if the downside risks that they see in the economy does materialize. Now, the most important consideration for the next move in terms of interest rates for the BOC is trade uncertainty. They have made it very clear that the ongoing trade uncertainty between the US and China is a main point of concern for them and does suggest that it poses a big threat to the Canadian economy. Now, following that meeting, we also had disappointing data in terms of jobs reports coming in on the 1st of November. We saw that both headline and full-time employment saw contractions. However, one positive was that average hourly wages did beat the prior number, coming in at a high of 4.36%. Now, it's also worth noting that the city's economic surprise index, now this is a index that basically measures how data performs compared to their expectations, and that city's economic surprise index has plunged from a high of 136 in the middle of June to just 27 in early August. So then looking at the baseline for the risk events, now we have two interesting data points coming up for the CAD. The first one is inflation on Wednesday, and then we also have retail sales on Friday. Now, seeing that the BOC has placed such a big emphasis on the ongoing trade uncertainty, we do suspect that the main driver for the CAD sentiment in the short term will be that overall risk tone in the market. Now, if we get any major breakthroughs or positive developments between the US and China, we would expect that to be a positive for the CAD, and then vice versa. If we see a further deterioration in the trade talks, that would obviously be a negative for the Canadian dollar. Now, it is very important for us to gauge what the market's overall risk tone is before each of these important CAD data points is released this week. Now, given the recent dovish tone by the BOC and the more bearish tone that we have seen on the CAD, a miss, the highest conviction trade would be a miss across the board for both CPI and retail sales, along with a overall risk off tone in the markets. Now, in terms of the data points, the market is expecting CPI to come in broadly in line with the BOC's 2% inflation target. We can see that CPI month over month is expected at 0.3, year over year is expected at 1.9, and then CPI common expected at 1.9 as well. Now, it's important here to realize the BOC's preferred measure of inflation is the CPI common, CPI trim, and CPI median. And the biggest one, or the most important one of these three, is the CPI common. So do take note of that one when we have our release on Wednesday. Now, retail sales could be more interesting as well, as it has fallen in 3 out of the past 4 months. Now, if we do see a fourth drop, it could increase the market's expectations for a rate cut by the BOC at their December meeting. And we can see retail sales expected at 0.1% and core retail sales is expected at 0.5%. 0.0%. Now, it is also important to note that the BOC did say that the Q3 GDP release later this month will be a key consideration for them. So it's not like retail sales will be the very last one, very last important data point for them to make up their mind. We do have that GDP numbers coming up as well. So do take note of that. Then looking at some possible sentiment shifts in terms of the dovish sentiment shifts. The biggest dovish sentiment shift would be from a combination of bearish factors. Firstly, an overall risk-off tone in the markets with a further deterioration in the US-China trade dispute. Now, the biggest dovish shift, of course, would be if an announcement hits the wires that says the trade talks have fallen apart completely and that phase one deal is now off the table. However, just an overall risk-off tone should also pressure the CAD as a commodity currency, and the more negative the trade developments get, the more the market will start to price in a potential move by the BOC, as they did stress that the ongoing trade uncertainty is a big concern for them. Now, secondly, we would need a miss across the board in both CPI and retail sales, as that would feed into that overall negative sentiment and cause further pressure on the CAD. And any significant misses in these numbers will cause the market to increase their probability of a rate cut by the BOC in December. And number three, also keep track of any idiosyncratic factors like oil prices, large builds in crude stock, or news that OPEC might increase production is both things that could pressure oil prices and should further pressure the CAD as well. Then in terms of possible hawkish sentiment shifts, this will also be a combination of bullish factors to consider. The first one would be a more positive announcement with regards to progress being made with the US-China trade dispute. Now, the biggest hawkish shift, of course, would be if the two sides claim that all the conditions of a phase one deal has now been agreed. You guys remember from last week that there's been a lot of focus whether the US will be willing to let go or roll back those tariffs they have put on China. So if we do get an announcement that they are willing to do that, or that it has been approved, then that can obviously be a major step forward. Now, given the stress that the BOC has placed on trade uncertainty, if we do see a massive breakthrough in trade talks this week, that would mean that the BOC's main point of concern and the reason for considering rate cuts in the first place would be out of the way. And this could see a very quick repricing of some of the negative sentiment that we have seen in the Canadian dollar following that previous BOC meeting. Now, secondly, we would need to have both CPI and retail sales to come in well above market expectations. And thirdly, we also need to we'd need to watch out for external factors such as the oil prices to be and stay supported. Now, given the recent negative sentiment on the CAD and seeing how much the CAD pairs have moved following that previous BOC meeting, the biggest reaction in the CAD would most likely be from a hawkish one, as some of the market participants starts to unwind some of those bearish positions that they have been taking in the CAD over the last 2 weeks. Now, how to actually look to trade the CAD. In the case of a dovish sentiment shift, we could look to pair the Canadian dollar with something like the pound. Now, the pound has remained well supported following the recent news that the Brexit party will not contend the 317 Conservative Party seats, which gives the Conservative Party a better chance of having a majority win in the upcoming general election. And then in case of a hawkish sentiment shift, we could look to pair the CAD against something like the euro. Now, the euro remains fundamentally bearish given the current state of the European economy, as well as the dovish monetary policy stance taken by the ECB. Now, this event is valid for trading a phase one trade if we do get a clear sentiment shift. Now, if you're interested to learn more about how phase one trades work, you can check out our news trading strategy playlist on our YouTube channel, where we post weekly examples of how these type of trades play out. And then if we do get a phase one move generated by a sentiment shift, then we can also look for a phase two pullback of that initial move. Now, we post updates on these moves inside our tradable sentiment shifts report inside the Forex Source terminal under the Market Insights tab. And you can see each day which sentiments are still in play and which ones are still valid for possible phase two pullbacks. And you can also learn about how these setups work and see them live during our live analysis webinars each day inside the Forex Source terminal. And guys, as always, thank you so much for taking the time to watch this video. If you do like our content, do us a favor, click the like and the share button, subscribe if you haven't done so already. And more importantly, if you have any questions or comments, let us know down below, and then we'll see you guys again in the next video. Cheers.